you're not an investor. You're an addict. Right now, you're probably thinking about the VIX. It's sitting at 17, 19. Not terrible. Not great. Just there, and that's exactly the problem. You're treating a single number like it's your financial horoscope, like it holds some divine truth about your portfolio's future. But here's what you're really doing. You're checking that fear index because you can't sit still with uncertainty. The S&P is up 0.84% today. The Nasdaq jumped 71%. Crypto's moving. Service now dropped 58%, and your brain is already spinning stories about what it all means. Every ping from your trading app floods your system with cortisol. Every red number feels like a personal attack. Every green one gives you that little hit of dopamine that keeps you coming back for more. You think you're investing, but you're just feeding an emotional gambling addiction dressed up in financial clothing. The VIX hit 17, 19, and your first instinct was to react to it. Not understand it. React. As if the universe just whispered a secret in your ear. But the universe isn't whispering anything. That's just your nervous system mistaking noise for signal. This is the cruel joke of modern investing. We have more data than Marcus Aurelius could have dreamed of when he was building the Roman Empire's wealth. Real-time everything. Fear indexes, sentiment indicators, heat maps that pulse with the heartbeat of global markets. And yet we're more anxious, more reactive, more controlled by our emotions than ever before. The technology was supposed to make us better investors. Instead, it made us better addicts. We're not analyzing the VIX. We're using it like a drug. A quick hit to either validate our fears or soothe our anxieties. Either way, we're not investing. We're just managing our emotional state moment by moment. And the market makers know this. They're counting on it. Every time you refresh that screen, every time you let that VIX reading change your strategy, you're playing their game, not yours. 2,000 years ago, a man sat in his tent on the Germanic frontier, leading the most powerful empire in human history through plagues, wars, and financial collapse. Marcus Aurelius never saw a VIX reading, never had a smartphone buzzing with market alerts, never knew if the Dow was up or down from minute to minute, but he built wealth that lasted centuries. Not just for Rome, but for anyone who understood what he understood about the human mind under pressure. He wrote this in his personal journal, never intending for anyone else to read it. You have power over your mind, not outside events. Realize this, and you will find strength. Not power over the markets, not power over the VIX, not power over whether ServiceNow closes red or green today. Power over your mind. The only power that actually matters when money is on the line. Marcus Aurelius would look at today's VIX reading of 17, 19 and feel nothing. Not because he didn't understand risk, not because he didn't care about wealth, but because he understood something we've forgotten in our addiction to real-time everything. The VIX doesn't tell you what to do. It tells you what everyone else is feeling, and what everyone else is feeling is irrelevant to what you should be doing. Think about this for a moment. The VIX hit 17, 19 today. What changed about the companies you own? What changed about their ability to generate cash flow? What changed about their competitive position? The only thing that changed was collective human emotion. And you're making investment decisions based on collective human emotion. Marcus Aurelius led Rome through the Antonine Plague. 15% of the empire died. Trade routes collapsed. Tax revenues evaporated. The equivalent of every stock market crash, crypto winter, and financial crisis rolled into one catastrophic event. He didn't have a fear index to consult. He had something better, a framework for making decisions when emotions run high and information runs thin. First principle: distinguish between what you control and what you don't. The VIX measures what you don't control. Other people's fear. Other people's greed, other people's reaction to uncertainty. You control your response to that information. nothing else. When the VIX moves, ask yourself, am I reacting to the number or am I using the number? If you're checking it compulsively, refreshing it throughout the day, letting it influence your mood, you're reacting. If you're noting it once, considering what it might mean for long-term opportunity, and then returning to your strategy, you're using it. Second principle, focus on what remains true regardless of sentiment. Companies still make products. Customers still buy them. Innovation still creates value. Economic growth still compounds over time. The VIX at 17 or 27 or 37 doesn't change any of that. It just changes how people feel about it. Third principle. Time horizon is your weapon against emotional volatility. Marcus Aurelius didn't make decisions for the next quarter. He made decisions for the next century. When your time horizon extends beyond the daily noise, the VIX becomes background music instead of the main event. Here's what this looks like in practice. The VIX hits 17 today. Instead of asking, should I be worried? Ask, what does this tell me about opportunity? Low volatility often means complacency. High volatility often means fear-based selling. Both create openings for patient capital. But the key word is patient. You can't be patient if you're addicted to the emotional roller coaster of daily market watching. You can't think long-term if you're responding to short-term sentiment indicators. Marcus Aurelius practiced something he called the view from above. When faced with immediate pressure, he would imagine looking down at the situation from a great height, seeing it in the context of time and space. The urgent became less urgent. The temporary became obviously temporary. Apply this to the VIX at 17. 19. From the view from above, what are you looking at? A single day's snapshot of collective emotion about future volatility. Not a command to buy or sell. Not a prediction of what happens next. Just a measurement of how nervous the crowd feels right now. And the crowd is usually wrong at the extremes and irrelevant in the middle. So what do you do instead of watching the VIX? You focus on what Marcus Aurelius would focus on. The fundamentals that don't change based on sentiment. The businesses you understand. The time horizon you can actually control. The discipline to act when others can't. And the patience to wait when action isn't required. This doesn't mean ignoring volatility. It means not being controlled by it. The Stoic investor acknowledges the VIX exists, considers what it might signal, and then returns to the work that actually builds wealth. Research, analysis, long-term thinking. Right